In the dynamic world of business, a well-defined strategy is paramount. It serves as a roadmap, guiding an organization towards its desired destination. A business strategy is essentially a comprehensive plan that outlines how a company intends to achieve its long-term goals and objectives. It's about making choices, allocating resources effectively, and positioning the organization for success in the competitive landscape. A robust business strategy acts as a compass. It provides direction and ensures that everyone within the organization is working towards a common goal. It helps businesses adapt to changing market conditions, seize opportunities, and navigate challenges effectively. Without a clear strategy, companies risk drifting aimlessly, vulnerable to competitors and unforeseen circumstances. The importance of a well-articulated business strategy cannot be overstated. It provides a framework for decision-making at all levels of the organization. It aligns efforts, fosters innovation, and enhances communication both internally and externally. In essence, a sound business strategy is the cornerstone of sustainable growth and long-term success. A successful business strategy is built on a foundation of clearly defined elements. These elements provide clarity, direction, and a shared understanding of the organization's aspirations and how it intends to achieve them. At the heart of any successful strategy lies a compelling vision statement. This statement articulates the organization's long-term aspirations, painting a picture of what the company aspires to become in the future. It's an inspirational statement that motivates stakeholders and guides the organization's overall direction. Complementing the vision is the mission statement. This statement defines the organization's purpose and its reason for existence. It outlines the industries the company serves, the customer needs it addresses, and the unique value it brings to the market. A well-crafted mission statement provides a sense of purpose and guides day-to-day operations. To translate the vision and mission into actionable steps, organizations establish strategic objectives. These are specific, measurable, achievable, relevant, and time-bound, SMART goals that provide tangible milestones on the path to achieving the broader vision. Strategic objectives break down long-term aspirations into smaller, manageable steps. These core elements work together to provide a clear and consistent framework for strategic decision-making. They ensure that all activities within the organization are aligned with its overall goals and objectives. Business strategies are not one-size-fits-all. They need to be tailored to the specific industry, competitive landscape, and internal capabilities of the organization. There are different levels of strategy, each addressing a different scope within the company. At the highest level is corporate strategy. This strategy focuses on the overall direction of the organization, encompassing all business units and activities. It addresses questions such as which industries to compete in, mergers and acquisitions, and resource allocation across different business units. Business unit strategy, on the other hand, focuses on a specific product line, service offering, or geographic market. It outlines how the business unit will compete within its market, differentiate itself from competitors, and achieve a competitive advantage. Functional strategy delves into the operational details of specific departments or functions within a business unit, such as marketing, finance, human resources, and operations. These strategies outline how each function will contribute to the overall business unit and corporate strategies. The choice of strategic approach depends on the organization's structure, industry dynamics, and strategic goals. Understanding the different levels of strategy is crucial for ensuring alignment and coherence across all levels of the organization. Developing and implementing a successful business strategy is an ongoing process that requires careful planning, analysis, and execution. The strategic planning process provides a structured framework for organizations to navigate this journey effectively. The first step involves conducting a comprehensive analysis of the external and internal environments. This includes assessing the competitive landscape, market trends, technological advancements, regulatory changes, and the organization's internal strengths, weaknesses, opportunities, and threats, SWOT analysis. Based on the insights gained from the analysis, the next step is strategy formulation. This involves setting strategic goals and objectives, developing strategic options, and selecting the most suitable strategies to pursue. This stage requires creativity, innovation, and a deep understanding of the competitive dynamics. Once the strategies are formulated, the focus shifts to implementation. This stage involves translating the strategic plans into actionable steps, allocating resources effectively, establishing clear roles and responsibilities, and building the necessary capabilities to execute the strategy. The final stage of the strategic planning process involves monitoring and evaluation. This includes tracking progress towards strategic objectives, measuring key performance indicators, KPIs, identifying any deviations from the plan, and making necessary adjustments to ensure the strategy remains relevant and effective.